Retirement. Millions of baby boomers have been looking forward to it for decades, and now that it's happening, they wonder if they can afford to do it. And young people with student loans to pay off and growing families, retirement isn't a priority. We wanted to see how much people know about planning for retirement. In exchange for a cup of coffee, these people agreed to take a quiz.
A good plan, a backup plan to be get a roommate and convince my girlfriend to go to law school.
Most of us are concerned about how we're going to pay for college, not about retirement.
Yeah.
I don't expect I'll be retiring. I expect to work for the rest of my life.
Hey, where's the cyanide, guys?
No. Surveys show that most people don't understand the basics of retirement. They know very little about annuities and the expenses associated with long-term medical care. They underestimate how long they'll live and how much money they're going to need to save. And they overestimate how much money they can safely withdraw from their retirement savings each month without depleting their savings before they die. Suppose you retired at the age of 65 and you had $100,000. Okay. How much money could you take out each month, assuming that your money was growing at 6% and that it would all be gone in 30 years?
I don't know, less than $10,000 a month. No, my math's not good.
Mine's terrible. It's actually $600 a month. Dr. Stephen Weisbart is an economist at the Insurance Information Institute. He knows a lot about retirement planning.
Relatively few people have plans. The older you get, the more likely you're going to have a plan, but even people 50 and older, probably 25–30% of them have plans and the rest don't. I think they're all hoping when they get there that something will work out.
What is the greatest financial risk facing retirees?
What's the greatest financial risk facing retirees? Probably, I suppose, money for prescription meds, right? So medical, I would think medical risk.
Catastrophic medical condition that could siphon off my retirement money.
Inflation is probably the biggest one because over a long period of time, even small amounts of inflation will add up and could be, towards the end of a long lifetime, financially very, very devastating. But major expenses associated with a major illness could also be a serious concern.
What has the average rate of inflation been over the past 20 years?
Oh, I think it's 3%.
Ding-a-ling-a-ling! There is some good news. Younger people understand that retirement planning is their responsibility.
I have a retirement plan through work, and that's how I'm saving for my retirement.
My retirement plan is to rely completely on my 401k plan.
And what about Social Security?
I guess hopefully I'll get a little bit of Social Security, but I'm not sure how much I'm going to be getting.
Millions of other people are going to benefit from generous pension plans, which are becoming a thing of the past.
I've reached the age where I have one more year that I can retire. Not to say that I'm going to retire, but I have been preparing probably more seriously within the past 5 years.
I've been working for the federal government for the past 30 years, and as you know, the federal government does provide employees with an excellent pension. In addition to what is comparable to the 401k, we have a thrift savings plan that the government matches part of it, so that's very beneficial.
What a lot of economists seem to be saying now is that the best answer for a lot of people is to stay in the workforce, is to just don't start your retirement until you're, I've actually seen some economists that say don't start until you're 75. That if you do wait until 75, even a small amount of money accumulated will probably get you by, because A, it will only have to last a few years, and B, it will have grown between 65 and 75 in most cases, so that it's more substantial. That's not a picture I think many people would now like to see of themselves in retirement, but it's an option that's worth considering.
The Insurance Information Institute says these are the most important things you can do to obtain a financially secure retirement. Save as much as you can in a retirement savings plan, such as a 401k, and resist the temptation to withdraw that money until you actually retire. Make a plan. Try to set a realistic budget for living in retirement. And then do the math to convert your expected 401k savings into what it would generate as a monthly income. That way you'll know if you're on track or not. And consider buying a basic long-term care policy. For more information on retirement planning, visit our website.